it's AK Upton Trader back at you again for some more technical analysis and looking at charts and some market commentary. Last week we saw volatility increasing, as I expected the week prior during options expiration week. But last week, especially going into Wednesday, Thursday, Friday, we really saw it starting to pick up. You know, we saw moves not being held on. We saw reactions to news being a little bit bigger swings. A lot of early morning move up, sold off type thing. So volatility has definitely been increasing. So let's look at the VIX to see why. And you can see why right off the bat. We've had 1, 2, 3 days in a row where the VIX is closed above the previous day's open. Okay, now that doesn't mean it's been positive 3 days in a row. I'm just saying it closed above the previous day's open, and you can clearly see that if we zoom in here even better. 1, 2, 3 days above. Now this is a bearish Harami candle, so it's actually got a little bit of a reversal signal here. You know, not the strongest one. You need confirmation, but it's a bearish Harami inside day. So wouldn't be surprised to see this have a little down movement here, maybe before bouncing back up. You can see the MACD and the RSI are both crossing up, and the histogram's even coming up a bit. So this could be a sign of a reversal, a sign of a move up, but obviously it's not going to do it, you know, 7, 8 days in a row straight up. It's going to have pullbacks before the moves can keep going on up. So, so the VIX is showing a little bit of movement, showing us why the volatility is increasing. And if you look at the Dow, it's kind of on the opposite. You can see here it's been kind of frustrating lately. This is a you've got 1, 2 days in a row of real big top wick candles right here. Take the studies off, you can see them again. You got a clear tombstone doji, and you've got a spin top doji type cross here. 2 days in a row of indecisive with a near bearish Harami candle here. So it's kind of a topping, not kind of, it is a topping signal. You know, kind of similar to down here where we dropped a little bit before taking back off. My one concern is there's no real volume with this move. It's just average volume. You'd like to see with this candle a real big volume day. Then I think we could clearly call it a top. Furthermore, the RSI is crossing down a little bit, but the MACD is holding strong right here. The histogram is trending down, and it looks like it's getting ready to reverse to the downside. So it looks like we could be putting in a short-term top here, but the way this thing's act lately, I wouldn't be surprised to see something like this with a down move, then a rally right back up. So keep an eye on it. We got some minor support here and some stronger support here at 1073.2. So those are two that I'd be watching for to offer some support. Here you got the SPX. I drew this last week talking about if we take the wicks out, this kind of looks like a bull flag, and you can still see it right there. If we do take these wicks off of here, and we just went on the bodies, you kind of be in a bull flag pattern, so looking for a break to the upside. If we take the wicks into account, you know, it's kind of a broken bull flag movement here. Again, still trending down, held up right on the support of 1166, dojied right on there. So right now, this is a tough call for me to see which way it would go. I could see it bouncing off this support line real easy, or breaking down beneath this, okay, and coming down to this support here at 1151. Really, either way to me, even though these two are definitely overbought and crossing over, still, just the way it's been acting lately, like I said, I could see it going either way. Then you've got the Nasdaq. Clearly defining a support line here at 2396. I mean, a very clear support line, being a line drawn in the sand, if you will, right here. So this is either going to serve as a support for the bounce, or if it breaks, I think we're going to see all the way down here to the 2327 area, perhaps even lower. So I'll be watching this line, and I'm probably not going to take action until I see a close above or beneath it. A clear close above or beneath it. You can see 3 days in a row we've been right in there. So there's no real clear movement other than the fact that this is making room from the top Bollinger Band, which, you know, this Bollinger Band's kind of curling down a little bit, but this one's still coming up. So this could be making a move to give us room off this Bollinger Band for another leg up. So it could be just a consolidation move for a leg up into there. All right. It may not be. It may be breaking down. One thing I find real curious is as I'm typing this up, the euro's just taken off. It took off here, and now it's gapped up. It's down actually 0.0001. You know, if I stream it, you can see it even better. We'll get caught up here. So the euro's kind of taken off, so I'm expecting a dump in the dollar. And if we look at the dollar, it's kind of going to be on some support. It was actually down 17 cents on Friday. Hit this uptrend line Okay, and we've got clear support right here, which at 23.88, which I think should hold up. We may make a wick or tail beneath it and then rally back up, but I think this will hold up. Okay, so I'll be watching that 23.88 line down there. And we've got a gap that we could also break this and fill this gap to this 23.80. And I'd imagine that really would offer some support right there. So of the indices, those are the things I'll be watching. And the dollar looks to me like it might be pointing for potential up move here in the near term for the whole market. Even though it's consolidating and looks like the market itself looks like it could rally up. I'm kind of skeptical. It could be a consolidation for a down move. Generally, in this time frame, though, we'd be looking for another leg up to the upside. All right, so now let's look at some stocks, if we will. We're going to start with, I want to show you the XLK. The reason I want to show you the XLK, because to me it's been, along with the XLE, which I've blogged about the last couple days several times, it's been one of the weaker looking indicators or indices or spiders, sectors, if you will. One thing I've been watching up here, it looks like it's kind of making a double top. It looked like it broke out right here, but it didn't. It held up. It wicked above it, but it didn't close above it. So that's pretty significant to see that this is holding up as resistance. Two, you got the doji cross here. You've got 2 days of down movement in a row, and this is kind of like a Nasdaq type stock, or it has a lot of the same components as the Nasdaq. Not exactly the same, but a lot of the same. You can see this: the MACD's crossed over, stock RSI has crossed over. So then I went in, and let's look at a couple of the holdings in there. One of them is Broadcom. This is one I like. Broadcom coming here, you can see this uptrend up here. It's making higher highs. It kind of broke down here, and when it breaks down, it's having pretty significant moves down. Okay, hit this resistance all the way down, come back up. It did break out to a higher high on this one, but it came down pretty quick, closed beneath it pretty easy after 2 days. I would think this is going to come down and at least retest this, maybe take it out before dropping down a little bit further. So keep an eye on Broadcom. Another one we looked at was Adobe. One I've looked at a lot. This has kind of filled the gap, so this is kind of curious. It stopped on the top of the gap, so we could be seeing it looking for a bounce here. You can see it more than filled the gap, hit the 20 moving average, kind of stalled out, wicked out there. So we could be watching for a bounce off this uptrend line here. So Adobe out of those actually kind of looks like it's more bullish than bearish, matching the other ones. Then we've got Verizon. This is another another one of those in there, and we got looks to me like possible head and shoulders formation forming here. Long left shoulder, head, right shoulder coming up, which is almost even to the left shoulder. Usually when the right shoulder is lower than the left shoulder, that's even more bearish. We do have a kind of a cross doji here. Could be signaling a reversal, bounce off of here, maybe a short bounce before breaking down. So that's Verizon, just a head and shoulders type pattern, and the RSA is confirming that the MACD is getting ready to be there. It's not quite there yet. Another one I want to talk about today is Goldman Sachs. Goldman is a financial one. Obviously, you can see we had this breakout of this downtrend line up to the upside here, and then it met resistance at this previous high, and then we've got the couple tombstone dojis followed, which was engulfed right here on this day. If we take the studies off real quick, you can see it engulfed it, and it's broken down to a new low here. All right, so that's it for today. A couple financials, a couple of them out of the XLE. There's a lot more going to be on Chartly tonight, so you can watch for those. Be watching for a lot of news all week next week. Monday through Friday, we have market moving news all week. We have jobs numbers, housing numbers. We've got a whole bunch of stuff coming out next week. So pre-market, in the market, a whole bunch of stuff that I think is going to increase volatility. It may drop down a day or two, but I think we're going to see another bounce up maybe late into the week. So let's be the AK Option Trader signing off. Trade well and prosper.